Well, welcome back. Today's episode, I'm going to answer your question, how should I invest a large sum of money? Now, my off-the-cuff answer to that is, I do it very carefully. I mean that as a joke right now, but there are investors that invest a lot of money in this alternative method of real estate. So I've been doing it for over 30 years, and I'm going to give you a little background on it. So in my youth, a large sum of money was $3,000 to $5,000 just to get a car. So I thought that was pretty good. But times have changed now, and those cars are $40,000 and $50,000. Well, same thing with real estate. So before I get into this, I want you to know I'm not an attorney. I'm not a certified public accountant. I don't have any professional license from the governor of the state or the federal government. I'm an investor, I'm an author, and I'm a publisher. So I don't have any fancy license from anybody to teach you all this. I just have the experience that I've gained from teaching people how to do it and watching it all happen. So my original career was I worked with the airlines. I was a pilot, and I was also an air traffic controller before that. Now, those jobs required no real estate experience and no money management experience. This business requires a little bit of each of those. So my experience is well over 50 years now, but the last 30 years, I've specialized in tax defaulted property and tax lien certificates. Now, once you learn this, you can do this for the rest of your life because it's been around for a couple hundred years and it's not going away. Now, you can make big money, but you can also lose money. So you want to pay attention to what we're talking about here, because we're going to talk about making big money, because the question was, how should you invest a large sum of money? And I'm going to show you that now, because I have students that specialized in just doing large amounts of money, so you kind of get it. So this is a very narrow area of real estate. It's alternative to the regular real estate, and it's not very well known, but it's very, very lucrative. It's also abundant. There's well over 5,000 auctions every year in the 3,000 counties. So there's more than you could ever want, and you can pick and choose. You don't have to do bread and butter properties in the 100 and 200,000 range. You can get way up there in the seven figures. All right, so now most investors go to investment advisors, financial planners, or people to help them out. Now, they have records that kind of go up and down. So don't think for a minute that the big boys don't lose money. They do. It's not always perfect unless you're doing something like annuities or some kind of insurance or a mutual fund. But this is a business you can really make a lot of money. So what do people generally teach? They say diversity. Spread yourself out in a lot of different places. Well, I say I like this business, so I would spread myself out by doing it in different states, in different areas, in different sizes of property. Now, the stock market always talks about growth stocks. I'm not negative on growth stocks, but if they get growth stocks, companies go broke, folks, and they're growing so fast they go broke. That happens a lot. Okay, other people are in the insurance business. They're going to tell you, well, let's do annuities so we always know what your set income is going to be. I'm not against any of these kinds of investment. Mutual funds, they've got something for everybody, okay? And what about the index funds? They've really had some great runs. So I'm not negative on any of those. So if you want to invest a large sum of money there, I'm okay with all that, but I don't have any expertise or any savvy that I can pass on to you. All right, now, if you go out in the sun, you want to block the sun, you put some glasses on so you block out the rays of the sun. Okay, your attitude can block out clear thinking and where real money is. So kind of open up your mind as we go along here, because this business appears to be easy and making money appears to be easy. But I'm going to tell you, making money is never easy to do. But there are some things that are a lot easier than others. So realistically, the investments are going to depend on the marketplace, the weather, and the politicians. Now, if they depend upon the politicians, you're in trouble because they make a lot of promises, as you know, and I'm not so sure they're going to fulfill any of those. Now, what about brokers and investment advisors? Well, they're working their buns off trying to do it right, but they can be made foolish very, very quickly. You can lose money. So I love this business of tax liens and tax deeds. Why? Because I know I'm going to make money when I start. I can look at the properties coming up for auction. I know right then and there, if I buy it for very close to this, I can sell it for so-and-so. So I know going in whether I'm going to have money. I'm not going to wait for speculation. I'm not going to wait for it to grow. I'm not waiting because someone said it was a good investment. So there's lots of investment approaches that you can take. I'm going to tell you, people always need a place to live. The big question is, can you buy it right? Well, I do my buying at tax defaulted auctions, 10 cents, 20 cents, 30 cents on the dollar. Sometimes I'll spend more. $400,000 property, what if I paid 30 cents on the dollar? That's 120,000. I've got a lot of margin between 120 and 400. So some investors want to do at that level. All right, so you don't know what you don't know. So the real world is you need to grow your money. If you thought about bargains, tax liens and tax leads are going to show you all the bargains you want. So think about this. Think about the large developers that come in and they see a big flat piece of land next to a growth area. So what do? They visualize they're going to put roads in, they're going to put sewer pipes in, electrical, so they're going to build residential houses. What if they get half through and go broke? That happens. Someone will buy that subdivision later. Now, that's a pretty big and substantial investment. All right, that's one way you could do it. What about a smaller one where there's 4 or 5 houses being built and right in the middle of it, the bank shuts off all the financing? Well, that developer is going broke also. My point is, I have a few students that want to buy and invest a substantial amount of money, and they want to make a substantial profit on that money. So how do you do that? Well, that's a question I'm answering today. How should you invest a large amount of money? So let me give you an example of a student and multiple students that have invested large amounts of money. Now, what's large amounts? I think $100,000, $150,000, $200,000. Now, that's not for everybody. I understand that. But we're talking about who should invest a large sum of money. They're going to do that, and they're not going to worry about it. Now, I've been involved in this for 30 years. Now, the tax lien and deed business, it's the world of the weird. I don't know what's going to happen, but I can tell you that 7-figure properties, $1 million properties, come up for tax auction. Do they come up in your community every week? No, but they come up across the United States. So I have people that buy these properties, and where do they buy them? Well, they buy them at online auctions, for example. All right, now how do these properties get to auction? Well, first of all, everybody is required to pay taxes. Everyone, all right? So the legislature demands, if you own a property, that you will pay property tax. All right, if you don't pay property tax, the legislature has already told that the board of supervisors at the county commissioners, to levy go ahead and levy their taxes, collect the taxes. If they can't, then they're going to seize the property and sell it at an auction. This is happening every day. It's happening in 3,000 different counties, plus 5,000 auctions they're going to have. So what does the treasurer do? The treasurer puts the property up for auction, but first they delete the mortgage. The mortgage is wiped out. So these properties are bought with no mortgage on them. Now, are they bought for top dollar? No. These properties are sold for 10 cents, 20 cents, 30 cents on the dollar. Why? Because the owner didn't want the property, they didn't pay the tax, and the county doesn't want the property. They already own the schools, they own the roads, they own the parks. They don't want the property. They just want to get rid of it and get it back on the tax roll. How do they get it back on the tax roll quickly? What they do is they sell it for a bargain. 10 cents, 20 cents, 30 cents on the dollar. They just want rid of it with no mortgage. So they're trying to get it back on the honorable tax roll. These taxes are happening all the time. Every year, the tax collector redoes the tax bill. So they're always going to get a bill. Now, these high bills, no, they're only 1 or 2 or 3, at most 4% of the total value for the tax, but some people don't pay it. All right, so these properties are sold without a mortgage loan, without a deed of trust loan. So you're going to get a mortgage-free property when you buy at these auctions. Plenty of them for everybody to choose from. All right, now what about a 7-figure property? In other words, a property that's worth over $1 million. Well, these are taking place all the time. So we're going to talk about an investor that got on an auction site that was an online auction site, and he goes there and he looks for properties that have a value of $750 or more. So today's question is, how should I invest a large sum of money? Well, let me show you how one investor did it. So the big boys always lead the way in every business. Now, in this example, the investor located a property for $750,000 according to the tax collector, according to Zillow, according to Trulia. You're getting the idea. So he felt comfortable. Now, before he even bought it, he could check with a broker and see what the values are. All right, so Zillow said the same thing, $750 or more. All right, now the property's on 5 acres of land, 6,000 square feet, had a nanny unit on the, all right, so this is a big property, less than 10 years old, nice neighborhood. Everything's good about the property, except it's coming up for auction. All right. Now, the auction companies make their own rules. So at the auction company, they said, all right, the bidding increments, in other words, if you're going to bid, the minimum bidding increment is $100. So this auction started at $30,000 at 10 o'clock in the morning. And so that means the first bid is $30,000, someone's going to bid that. The next bid is $30,100. Now, someone can bid higher than that they want, but everybody wants to steal it. So $100 at a time it went up. Well, 9-10 hours later, they were still bidding it up, $100 at a time. So my guy's an investor. He knows he's got big money to invest. He's got a large sum, but he wants to make a large sum. So again, the property value is $750,000. Well, 10 hours later, the property sells at auction for $177,000 to my investment student. All right, now this wasn't the first deal he did. He understood what he was doing. He invested $177,000 online, and he got a property valued at $750,000. Now, could he sell it the next day for a $100,000 profit? Well, of course. Could he sell it in weeks and make a $200,000 profit? You're getting the idea. So he's buying it low, he can sell it low, or he can hold out for retail. The point is, this is happening across America. So what's the question today? How would you invest a large sum of money? I call $177,000 a large sum of money. Tax defaulted properties are all sizes and shapes. There's office buildings, there's commercial buildings, there's regular homes. Most of the people are buying bread and butter homes in the $100,000, $200,000 range. Are they big ones? Yes, there's plenty of big ones. Is there whole subdivisions? Yes. So I'll give you some examples. In California, I've gone to auctions in places like San Bernardino, where the auctioneer will sell the property for $100 with no mortgage on the property. And some of these properties are worth $150,000. Now, I can't tell you what's going to happen in an auction. I can tell you we've been to lots of them, but to read the rules and you'll find out. My point is, there's large developments that sell at these auctions. I mean, developments with 20 or 30 residential lots in the subdivision that could be sold. So you're kind of getting the idea. Now, anybody can do this, but I want to give you two cautions before you even go to the auction. If you're going to the auction, here's what you need to know. You need to know that you have to have boots on the ground, that you looked at that property. Why should you look at it? I don't know if there was a windstorm. I don't know if there was a fire. I have no idea what took place. And you want to make sure whatever you buy, you're going to get. So when you buy at an auction, you get property as is, keeping in mind the mortgage has been wiped out. Okay, second big caution. You need to know what your selling strategy is going to be before you buy. In other words, what's your exit? What are you going to sell the property for? Now that'll give you a maximum to bid so that you'll know you'll only bid up to a certain level because you want margin for profit. So you always want the margin for profit. So my name is Ted Thomas. Right below me, there's a free gift for you. I'll see you on the next video.